Good afternoon, all. Steve Parisi here with IBC Global. Hope your day is off to a fantastic start as usual. We've got my good friend, long-term agent here at the company, phil.wieczorek. Get your last name right there?
You did. What's up, Mr. Parisi? How are you, sir?
Thumbs up, my friend. Going a mile a minute as usual. How about on your end?
Same. Very
Gotcha.
busy. Very busy, but always a good thing. Rather be very busy than the opposite, right?
I'm with you. Yeah, I could rewind the clock and show you days where I had almost nothing to do, and it wasn't good. I wouldn't last very long in the business if that was still going on.
Yeah.
Yeah. Well, thanks for your time today. What I want to talk about with you today is a topic that everyone we speak with, I think every single day is interested in, which is the topic of policy design. Different splits, different companies, actual numbers. I'll often share several stories, but I know you've got some as well that are a bit different because everyone has a unique situation. A little bit before we started, you talked a little bit about a 1090 split, and you come across individuals that sometimes have purchased a policy with a different type of design. Maybe it's a higher base premium, and they come to you just, and correct me if I'm wrong, starting out with questions like, hey, what are the pros and cons with what I have compared to what you're showing me, Phil? Is that kind of it?
Correct. Yeah, a lot of times we'll have people come to us and say either I'm working with another agent, this is what they've shown me. Maybe it's a little higher rather than a 1090, maybe a 40-60, 60-40 split. And they, like mentioned, they want to know, why did they design it the way that they did? What are the pros and cons? Is there more death benefit involved with more base premium? Am I going to be hurt long-term performance wise if I do a 1090 split? So there's a lot of different factors that go into play when talking about policy design. And of course, there are so many agents out there that have their own idea as to how a policy should be designed. So it's making sure that we are explaining, of course, why we do things the way we do and making sure we have the split proper for each individual.
Gotcha. Thanks for that. So when you come up against that situation where someone says, "Hey, I've got a policy that's designed with, whatever type of design," or maybe they don't know, they send it to you and you identify it pretty quickly to say, "Okay, you've got a, 50-50, 60-40, whatever it might be." And then they're seeing your numbers and saying, "Okay, like you've got significantly more cash value upfront and potentially in most cases more long term when it's the same company and same product, like how or what's going on here, like how do you address that situation, because that can be a sensitive situation. Just being in the industry for a long time, the normal reaction from just call it a financial services professional or insurance agent's mindset is to take offense and kind of go to war with the other agent. But we don't want to drag the consumer into that. Just remember that they're interested in cash value. So how do you tactfully and properly address that without slinging mud at anyone else?
Sure.
Yeah.
So, um, first thing is we let the numbers speak for themselves. We don't want to just say that the 1090 is better or a lower split is better than whatever someone else is offering. We like to show the numbers, let the numbers show how it looks short term, long term. Also, when it comes to other agents overall, it really comes down to a couple of different factors. One is knowledge of how to actually design the policies, working the software to be able to minimize that base premium, as well as sometimes it's the company itself that they work for. They might have limitations as to how low they can actually go. So it's not necessarily the agent themselves that are trying to push a higher split. Again, it might be the company overall. But when it really comes down to what's best for the client, we're always looking for what's best cash value wise. There are some people that care about the death benefit, but typically 90% of the people we work with, they say, forget the death benefit. Let's put that secondary. Let's focus 100% on the cash value. And that's where that 1090 split is going to come out on top short term and long term as well. Some agents believe that long term, and sometimes it is a case where the higher base does catch up. But the reality is the actual returns, when we looked at case studies, the actual returns and the cash values, even what was illustrated versus the reality, the 1090 split comes out on top. So it's just explaining all that information. Again, it's not trying to go against any other agent overall. Every agent has their idea as to what they think is best for the client. Doesn't mean they have bad intentions, anything along those lines. We just strongly believe in the 1090 split and providing what we believe is best for the client overall.
Yeah, no, and that's a perfect explanation. I mean, 1090 or minimum premium policy, because as you said, all companies have different limits depending on what the client wants. And just to kind of add some not clarification, but additional info there is what we found to be just so consistent is if I'm paying any amount of money into a policy, if that base premium is minimized, typically we see the greatest 100% of the time short-term cash value, greatest guaranteed cash value, and 99 out of 100 cases, greatest long-term cash value. But really, on that third point, what I want to emphasize, kind of the unseen factor, is when you take illustrations out, projections out of the equation, actual results, those case studies you mentioned, real performance, not projections, that's where we've seen greater long-term performance with minimum premium policies, just because how insurance companies apply dividends on both base premium and PUA dollars. They can mess around with the base premium, how they credit dividends there, and they often do. I always see it adjusted, and I know that can be technical, but to sum it up, to maximize that cash value, that minimum premium typically does it. Any thoughts, comments, or rebuttals?
Yeah, that could be a challenge explaining to clients as well,
Yeah.
because someone will see the illustrative values with one company, see how great they are, and think, okay, why would I go with your company when clearly cash values are way better? Maybe the split's a little higher, but overall, long term, short term, things are looking better. But when we look at actual results, actual case studies of past performance, the four major mutuals come out on top. And again, like you mentioned, when we're minimizing that base premium, that insurance expense, it's coming out on top 99 out of 100.
Yeah.
So again, it's not just saying these things, but showing the numbers. And then you've done a great job with a lot of videos of doing case studies, seeing actual old policies and seeing the results overall that help with everything and explaining it.
Got it. Got it. So let me ask a question from the people that you work with where you've got the whole long-term performance argument and actual results and you get technical, but do more people you work with have more of a focus on the upfront cash value or the long-term values, just from your experience?
It's a mix of both. I would say people will look at short term, of course, what is my break even point? Usually people are taking out policies because they want that cash accessible. Of course, we do have some people that use it as a high yielding savings asset, thinking very long term. But overall, I would say when we really think about it, most people are thinking short term, I want more cash value. And if things would catch up maybe 30, 40 years down the line, at least projected on the illustrations, it's not anywhere near as important overall.
Yeah, I'd agree with that, especially with real estate investors and business owners. I mean, I look at it myself like if I take 30% less upfront for the potential of 0.5% more 50 years down the road, it's like as a business owner, that's a huge opportunity cost up front. Like, and I know some of the people that you've worked with a high early cash value product sometimes look at it and say, you know what? I'm okay with giving up a little bit long term because it's what I can do with the money today in the first 5 to 10 years. That's where I'm really going to continue to grow my wealth. Like a high cash value life insurance policy, a lot of people will view it as that alternative to a savings account, right? A high yield savings asset, safe, liquid, tax free, all the core benefits. But that's not where I'm going to build wealth or make my money. Like it'll produce, just setting expectations properly, somewhere between that 3 to 5% range on cash value. You have a nice death benefit, but the cash value will produce what it's going to produce. And then really, like if you're an investor, if you own a business, where you make your money is with your real estate deals or with your business. So having access to this policy that's producing at a greater rate than a bank account, which does nothing, that's where the appeal is. And from a lot of business owners that you and I work with, that's like the point of attraction. So it's really just asking questions, finding out what they're after, and saying, okay, if this is what you're after, here's the different options, but this guy will suit you very well.
Yeah, I'm with you 100%. That's what cash value life insurance overall, one of the main advantages is, of course, like mentioned, it's growing on an annual basis. You are getting a return. It's growing tax-free, which is great, but the accessibility of the funds itself, the lack of loss opportunity cost compared to other investments, that's where a lot of value comes in, where people's eyes light up and say, okay, this is where I can use my money, not have to wait 10, 20, 30 years, take a penalty overall when using those funds. So a lot of benefits overall when you really look at it big picture.
Yeah.
And I'm with you 100%, where most people are going to look at the short-term value, short-term cash value, and say, okay, I can work with that cash value now rather than waiting 20, 30 years down the line to potentially have something maybe even or a little more overall.
Yeah, yeah, definitely with you. So, what do you do when you run into a situation? You mentioned it earlier, where you've got a product shown with a minimum premium, which does mean it's minimum compensation to you, and you're up against a competitor that is selling a higher base premium with a smaller carrier that pays a very high commission. So they've got a higher premium, higher compensation, and they're saying, hey, this is in your best interest, Mr. Client, and Phil's trying to rip you off. Like, when you hear that, how do you respond to that? Because you're good at this, and how you respond in those particular situations is very, very important. Before I say anything else, like, how do you respond to that particularly? Pretend if I'm saying, hey, my agent said that, you're no good, Phil. Maybe he used some other words, but he said I should go with this design because it's the way to do it, and I'm going to have greater long-term performance with a 60% or 40% base premium compared to what you showed me.
Sure, it's easy to just have a rush reaction and just say,
Right.
no, that agent's wrong, and to put the other agent down. But again, it really just comes down to, I would say, stating facts and showing the numbers. I try to just focus on that rather than any kind of emotional reaction. And even for clients who have been working with another agent, maybe they're far along the process, or even they opened the policy with that agent, they have a great relationship with them, and for them it can be hard to come to the reality that, you know what, maybe they don't have my best interests in mind, or just overall they don't know how to design things what's best for myself. So we're always trying to have the mindset of, okay, what is the best, what can we do best for the client overall? And sometimes taking out a policy isn't the direction to go. And it's just getting all the information in their hands for them to make that decision, rather than putting any pressure on them, or again, putting down any other agent and bringing emotion in, where again, we just try to state facts and not to get too emotional overall.
Good move. Yeah. So not taking the bait, call it, where you get into that war, because you are good at that, and you did a good job there, not even by not even addressing it, which is good. But no, that's important, because in this business that happens a lot, where when a policy is being sold, like if I'm a consumer, like if I'm interested in a policy and I state my goal is maximum cash value, like that is what I want, and I'm looking at it and something's off, I don't want to hear that, oh, well, this other agent's trying to rip you off. Like, what do you need to tell me that for? And you don't do that. And we try and make it a point that our company doesn't do that toward anyone. Like that, I don't like that kind of stuff. Instead, like if I'm that consumer, I just want to know, hey, is this set up properly, or can it be better? Should I look at different options? If I'm looking at it on Amazon, right, if it was available that way, could I see it all there? And then, like you said, okay, here's numbers, here's different companies, here's some data to be aware of. And that way you can make a decision.
Yeah, I'm with you. And I think that's how I'm usually sold when it comes to other products and other salespeople. I don't like when people put pressure on me and say, okay, let's move forward on this, without looking at all the data, looking at the numbers overall. And if when any salesperson is maybe trashing another person, putting them down, that automatically puts me off. So I just think, okay, how would I like to be sold? And try to convey that to other people. And I think that's what I've appreciated here at IBC Global, and working with you. There is no pressure to make other people buy a policy. It really is, okay, what is best for them and their interests. And if it doesn't work out, so be it. We gave them the information, we did the best we can, but we want to make sure that someone is 100% comfortable opening a policy. And I think we talk about this all the time. We don't want them coming back to us years down the line and saying, this is not what you sold me, this is not what you told me. So we want to make sure they have all the information they truly need to make the right decision.
Yeah, no, thanks for mentioning that. And that's always been, call it in the front of my mind from day one, just with working with people remotely, because that's what it's been since I kind of branched off on my own, all GoToMeeting, Zoom calls like this. In the early years, when I was still learning a lot of this stuff, I didn't want to put someone in a policy knowing that they could go meet with their local agent. And a lot of times they say, hey, can you take a look at this? This kid I met with online showed me this option. Like when you really think about it, that I was the kid showing you the options. And then when it's presented to someone else, if it's not maxed out, like it's going to make it very easy for another professional to say, oh, I can beat that, no problem. Try and come in with better numbers or something like that. And that's, going way back to the early days, what always went through my head, but that stuff happens. So to your point, you don't want someone coming back later if you set it up properly from the get-go and copy what corporations and the big players do, then you're good. You just treat everyone like the big players. That's all.
Exactly. And it can be tough because whenever someone does come to an agent, it's building a relationship, it's gaining trust overall. So if they come to me and I show them something better, their trust can be hurt overall. And that is why I feel like the insurance business, especially life insurance overall, there are a lot of people that don't like the business, don't like life insurance because of maybe being burned in the past. So sometimes it is tough to gain their trust again, or just gain their trust overall because of the nature of the business overall. But like you mentioned, as long as you have the right intentions, you're just doing what's best for the client overall, everything will work out in the end.
Yeah, definitely. And we can close with a point you mentioned too, as far as how you don't like to be sold or put under pressure. I don't either. And I typically say, all right, I'm not working with this person anymore if they try and do that kind of stuff. But just call it the informational sale or informational business. Like Amazon is so good because they make everything so convenient for their customers. You can get all the information up front, right? That's what they're good at. So, have you ever gone on Amazon and felt pressured to buy a product right now, otherwise it's going to go away?
No, not really. I mean, they might pop up some coupons or something and say, "If you buy now," but nothing crazy.
No, nothing like that. So, and my point with Amazon is everyone's used to working with Amazon. Who doesn't buy from Amazon? A couple people might not, but the majority of people do. It's a very easy process. You can click one button, you buy the product, and that's it. So when you can emulate that with any type of business, and the main thing when I say emulate, make life easy for the consumer, because you can't show cash value life insurance in the same way you can buy products on Amazon. Like you can't do that, not yet at least. But if you can make life easy for the consumer by providing information, being a resource, and when they're ready, they can click that button and start the policy, that's in my mind is the key. And that's where I see the business going more and more, because people don't want to have to deal with the stuff of being pressured to purchase a policy and such. Not everyone likes that. So why are you going to try and do something to someone that they don't like? They're just going to say, all right, get lost. I'm going to go work with someone else.
Exactly. And that's what's nice here is we do have that process overall with sales agents where we are following up with people, but again, it's more information based, making sure it makes sense in their minds, it makes sense overall, even in our minds. Some people will be very excited, come to us and want to open a big policy, and we have to take a step back, make them see the big picture and realize maybe it can work for you, but funding a lot less, or maybe waiting until you are done with certain debts. Everyone's situation is different. So making sure, again, we're getting information in our hands and being realistic as to what the product is, instead of maybe putting on pressure like other agents, or even some videos and information out there where it can be gimmicky and they make it seem better than it really is. So making sure people's expectations are right, making sure it makes sense in their situation, their family situation. And again, it really just comes back to what's going to happen 5, 10 years down the line. Is it going to work for them? Are they going to come back and feel like we pressure them? That's what I always think about is, for myself, if I make a big purchase, I don't want to go back to that person and say, why didn't you tell me this? It really is on myself as well to just make sure it makes 100% at the end of the day.
Yeah, definitely. And on that point, a gimmicky or not being completely transparent, and I'm not saying this as a shot toward anyone, but someone that that you and I both worked with that pays in 7 figures per year into a policy. That's a large policy that he has.
Yeah.
I spoke with him recently, and a point of frustration he had is every time he would do research on cash value life insurance, he would see, hey, you have a dividend interest rate of 6%, and you can borrow from the policy at 5%. And here's a very sophisticated individual, business background, has invested in, finance. He's got a lot of experience there, that he sees that and hears that and automatically thinks, okay, I can earn 6% in a policy and borrow at 5%, which if you try and do that to anyone, especially someone putting in 7 figures per year, what's going to happen?
Yeah, once they find out the reality of the situation, they're going to be gone, because they thought it was one thing and it wasn't. It's like the rug was pulled from underneath them.
Yeah, and if they already started the policy, now they're going to be ticked off at you, and you don't want anyone ticked off at you, but especially, no thanks, not someone like that. And he's a great guy. I mean, he'd always approach things properly, but with a large amount of money, if you give misinformation or things that are just accidentally misleading, like you do have to be cautious of that. So the transparency as far as saying, hey, yes, you have a dividend rate of 6%, you can borrow at 5%, but that dividend of 6% means you may actually net out 4 to 4.5%.
Right.
So you have a negative spread. Oh, then why should I do it? Well, here's some alternatives with a collateral loan. We can show you how to max it out, how other people do it, and all that good stuff. But it's important just to be transparent with that kind of stuff.
Yeah, absolutely. Like you said, transparency is very important. And sure, there's so much information out there that will be misleading. So again, it's tempering expectations. And of course, your videos are great at going to detail on the reality of what whole life insurance, high cash value whole life insurance is, and making sure, again, it makes sense for them rather than getting stuck with something and then regretting it down the line.
Gotcha. Well, Captain Phil, I appreciate your time as always, my good friend. It's good to see you. Can't wait to see you in person again on a regular basis, but it'll be here soon enough. If anyone's interested in contacting Phil, we've got his contact info below. Feel free to reach out anytime. If you call into our office, he might just pick up the phone as well. Depends how busy he is and if someone else beats him to it. But Phil, really appreciate your time. We'll talk to you soon.
Talk to you soon, Steve. Thanks. Appreciate it.
All right, thanks. Enjoy. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.